Markets under pressure in today's session, again at the mercy of news coming through from the Eurozone. Nothing really new. Volume slightly higher today, around 10.3 billion rand passing through the market.
Yeah, volumes beginning to pick up as people sort of return from holiday. But I think the European news, which was with us for most of 2011, I think generally for the first half of this year will constrain markets. Particularly Italy and Spain have quite a lot of refinancing to get done in the bond markets from February through to April, and I think that will keep us constrained.
Yeah, we were very optimistic in yesterday's session that we would breach that all-time high that was hit a couple of years ago. Johnny, does it mean very much for the market? Should we rather be focusing on the PE of the market at this stage?
Well, I guess you could sort of focus on both. I mean, it is quite interesting that that high that you alluded to earlier was set in May 2008. So we may actually have a situation where the market's actually added no value to investors for 4 years, which is something we've been highlighting for some time. From a PE basis, yes, the South African market at least is looking slightly more attractive at the start of this year than it did sort of last year and the year before that.
With regards to market performance today, we had Massmart at the top of the top 40, gaining around 1.6% in today's session. Sales for the first half increasing by around 15%. What is your sense with regards to Massmart going forward? Because it created a bit of disappointment late last year, but the share price sitting at 182 rand and 35 cents.
Yeah, the first half sales numbers seem to be in line with what the analysts had expected. The composition was slightly different. The food, sort of the macros of this world, it's slightly better, and some of the discretionary stores within Massmart actually did slightly worse. But overall, seemed to be very much in line with what the analysts were expecting. Having said that, Massmart is not cheap by any stretch of the imagination. It's on a PE of more than 25 historic. And even on a sort of a bullish outlook, looks like it's 23 times forward. So, talking about the PE of the market and relative to sort of some of its global peers, Massmart does look quite expensive.
With regards to the likes of Exxaro, also a bit of news coming through there. Exxaro making a substantial bid for African Iron. It's an Australian listed company, but it does operate in the Congo. Do you think that it is a very good move for Exxaro right now? Is it a wise time to be embarking on acquisitions?
I don't necessarily think it's a good time to be chasing iron ore anywhere globally. I think the iron ore market is very much hinged on China and on China continuing to grow. I think by the time that Exxaro gets this mine up to production, bear in mind that it's not producing at the moment, I think there'll be a lot more iron ore coming to the market via a lot of the majors, Anglos in South America, and I think by that stage the iron ore price will be considerably lower. They're not paying a cheap price for this asset. I think they'll struggle to make any kind of economic return on this acquisition.
Well, it's fascinating because yesterday Exxaro was in negative territory and not down substantially. Today it's down around 0.9%. Would you say that the market is not really responding to this news at this stage?
News was leaked, I think, on Monday via the Wall Street Journal, so it's been in the market for a couple of days. So yeah, difficult to try to predict exactly what happened on the market today. But generally, the comments I saw there were generally mixed. There were some analysts who liked the deal, some who thought it was expensive. We generally don't like iron ore. We wouldn't see why you'd be paying a massive premium, sort of 40% premium to the closing price of the company's share price yesterday for these assets.
Johnny, MTN under pressure today, down 2.2% at the bottom of the top 40, sitting at 132 rand 70. Really hard to look at the day-to-day movements, but MTN sitting at around 132 rand. It was one of the favourites last year and of course the year before. Do you think that it's going to maintain that into 2012?
Look, there's a lot of uncertainty at the moment around some of the countries that it operates in. Most importantly, obviously, Nigeria and Syria. Nigeria contributes about 40% of the EBIT of MTN. And as you know, they are looking there at removing some fuel subsidies. People are concerned, therefore, that if consumers are paying more for fuel, there'll be less to spend on other discretionary items like airtime, and that could hurt MTN. So that's why you've been seeing the weakness in MTN that you have sort of year to date.
Johnny, with regards to one of the strongest themes that have come through, at least the rhetoric from many analysts out there, inflation seems to be top of the agenda. I know that you're also looking at inflation as one of the key themes into 2012. What is your view on this?
Our view last year was that inflation would breach the 6% level, which is contrary to what the Reserve Bank was saying at the time. By October, we did actually breach 6%. We look quite closely at the maize price, which is making all-time highs now. It's up sort of 75% year on year. That is going to begin to impact food inflation quite materially in our view in the first half of this year. And we see a sort of no end to the continual rise in South African inflation.
And Johny, well, how would you get exposure to the inflation scenario that is playing out? One would assume the fact that food inflation is perhaps positive to the food retailers. Is that the right assumption to make?
Generally, that would be a good way to play inflation historically, but the food retailers, as we sort of started off by talking about Massmart, are not necessarily that cheap. Most of them are on sort of P's well north of sort of 20 times. So that is one way of playing it, but there is always the risk that those stocks actually derate. You could buy index-linked bonds. They've also rallied quite hard on the expectation that inflation will pick up. Some of the property stocks also give you some kind of reasonably good in inflation protection as well, given that the rental escalation that they charge their tenants generally are linked to some kind of inflation index.
Johny, as you mentioned, that all-time high that I was alluding to a bit earlier was hit in March 2008. So basically for 4 years, if you delved into the market then, you haven't really gone anywhere. How have you been performing over the last few years? Is it really, and we keep talking about this, a stock picker's market, that you really need to be in the right stocks at the right time?
Look, generally it has been sort of quite a tough market. A lot of it has been dominated by what we call the sort of risk-on, risk-off trade. So you saw the second half of 2010, Ben Bernanke sort of introducing QE2, and you saw a massive rally in risk assets. Most of 2011 was sort of a bit of a risk-off trade. So there's quite a lot of correlation in the market, which means that stock pickers probably have to hold their positions for a lot longer, while the individual equity story actually plays out. Because there's so much macro news that is driving the market on a day-to-day basis.
With regards to the troubles that continue in the Eurozone, and Fitch are not making things better after we saw a bit of optimism with regards to the meeting between Germany and France, that now all being unwound with regards to Fitch saying that we could see a cataclysmic collapse of the euro. Do you think that that is a likely scenario that is playing out if the ECB doesn't buy the bonds that everyone's been talking about for quite some time?
I don't think we'll see necessarily a collapse of the euro, but I do think that the current constituents of the European Union will look very different 5 years from where we are at the moment. So you may have certain countries like, for example, Greece, either being pushed out or just effectively removing themselves from the European Union. But I think the actual currency union will probably continue. Do
you think that's going to happen in 2012? Do you think that Greece is going to leave the Eurozone this year?
And look, Greece is in sort of obviously in a very tough corner at the moment. They obviously need to get their house in order. They continue to try and apply austerity to that nation, but effectively they seem to be pushing on a string at the moment. The sort of corporates and individuals in that country either cannot or will not effectively be able to take austerity for much longer, and at which point they may have to seek an alternative solution, either effectively defaulting or effectively leaving the euro and then defaulting.
Fantastic.
But I think the chances of Greece leaving the euro are sort of much higher in 2012 than they were last year.